Okay. All right. Good morning, student friends. Today we are here for one more class on the finals, cost management, strategic cost management and performance evaluation. You are all aware that the exams have been deferred because of the COVID, and you have now some more time to study. To take full note of the discussions that take place in these classes and get the maximum benefit out of this. The mock test papers we are trying to upload in this week. So you see, once you get the mock test papers, also you make full use of them. The Board of Studies also will be in touch with you in evaluating the mock test papers. So, those are, very, very important issues which I thought I should, let you know. Have a look at the examples that we are going to carry in the. Have a look at the examples that we are going to carry in the students' bulletin. We are going to carry examples on final examinations, so have a look at them. Have a look at the suggested answers that we have listed and the revisionary test papers, of course. But today, I have the pleasure of, having with us Babu Abraham Kalivali, who is a very senior council member, having spent more than 7 years in the council. But he has a separate, USP. The USP is this, that he is a former chairman of Board of Studies. And when he was the chairman of Board of Studies, the study materials that you see now were all developed. And he had given, days after days, hours after hours to see that the study materials are in consonance with, with what is happening globally. So, he is an old hand at Board of Studies. And nobody knows Board of Studies better than Babu Abraham. And we always call him Babu sir because with the the kind of contribution that he has made. And further, now presently, you'll be very happy to note that he is the chairman of Expert Advisory Committee. All the difficult questions from all over the country, CAG asking difficult questions on accounting issues, they all come to Babu sir for solution. For example, today he has a meeting at 10:30. To discuss some of the most difficult questions on accounts. So he has a really checkered history as long as the institute is concerned, and it is again our proud privilege to have him here with us. So Babu sir, if you could kindly address the students. Babu sir, please.
Yeah. My distinguished colleague in the Apex Council of the Institute of Chartered Accountants of India, the Honorable Chairman of the Board of Studies, the Council has got 32 elected members and 8 Government of India nominees. Out of that, we have only 2 doctor chartered accountants. See, doctor is a solution for all ills. Therefore, Dr. C.A. Debashish Mitra is one among the 2 doctors elected members in the Apex Council. I am very glad he is heading the Board of Studies this year, and we launched this brilliant initiative to support the students in the examination. Probably in the lockdown period, this is the best way to utilize your time. The Honorable Vice Chairman of the Board of Studies and the faculty, Meena, and the Director of Studies, Ms. Vandana Nagpal. Therefore, I'm very glad that the Chairman and Vice Chairman of the Board of Studies is up along with the students at 7 o'clock in the morning. I think today we are going to start the sessions on strategic cost management. I'm sure you are all final students. I would consider costing is one of the most scoring paper in the CA final examination. But if you see I was also part of the examination system for the last 7 years. One of the beauty with the costing paper is at least 25% of the students score above 60% and 25% of the students score below 30%. Therefore, what is the basic issue in that? See, if you are able to study this paper with absolute conceptual clarity, this is one of the most scoring paper. For example, if you are to study standard costing, you should know what is the implication of standard costing, why standard costing has emerged, what is the standard as the term implies. When you go for marginal costing, you should know what is the marginal part of it. Therefore, why marginal costing is important. Therefore, I think the conceptual clarity and why costing is required. Therefore, I think chartered accountants today, wherever are functioning in the company, in the corporates, are being also look after the costing area also. And in any production environment, cost of the product is a major concern. If you are able to reduce the cost of the product, you are able to increase the margin. Therefore, you should know what is contribution, what is fixed cost, what is variable cost. If you are able to understand the basic concepts of the costing, I think then you will fall into that category of 25% who scores above 60% marks. Therefore, undoubtedly, you believe me, this is one of the most easiest paper, but I would say, what is the beauty of a chartered accountancy examination? The beauty of the chartered accountancy examination is, it is very difficult to fail in this examination if you have a proper study. If you are well prepared, it is extremely difficult because there are lots of checks and balances. Today, institute comes out, the Board of Studies comes out with one of the best of the study materials in the world. I can say that today our study materials are world class. Therefore, if you are able to follow the study material properly and also get some guidance, I am sure this will be one of the easiest paper to score. Therefore, my kind request to my students and the other part of this examination, beauty of this examination is, it is extremely difficult to pass this examination without adequate preparation. Therefore, this goes two way. If you are able to prepare well, your pass is certain. If you are not able to do that, I think it is extremely difficult to pass this examination. Therefore, my Vice Chairman Sushil Goyalji from Calcutta today the beauty is the East is controlling the Board of Studies this time. Both Chairman and Vice Chairman are from the East, from Calcutta. Therefore, therefore my dear students, my only brief, I think the faculty will take you through the subject proper. Therefore, I don't want to, my only request is 3 fundamental principles if you want to study, pass this examination. First, you should know what to study. Probably you should know the syllabus is a basic framework. The Board of Studies has come out with a beautiful FAQs on strategic cost management. You should know what are the those who have been continuing from the old syllabus, you know what are the portions which has been covered in the old syllabus which is coming in the new syllabus. What is the mark weightage for each area, and what is a mark for theory, what is a mark for practicals, what is a mark for case studies. Therefore, my kind request to you is, it is available in the Board of Studies website, kindly download. Both, therefore, the syllabus and probably the last 5 years question papers also will give you a broad idea what to study. If you are able to first frame on what to study, then I think it is most important is how to study. And my suggestion to how to study is, first you divide into 3 parts. First revision, second revision and the final revision. 60% of the time, let it be allocated to the first revision. 25% of the time for the second revision, and the final revision will have 15 marks. The first revision, what is your idea? Read the study material cover to cover and underline basically what is most important for you. Therefore, on the second, you should be very conscious that on your second revision, you will be only going through what is being underlined and what is being marked. Therefore, on the second revision, please prepare your short notes. Wherever, even for the formulas, you should know what are the formula, what are the implications, and on the third revision, close to the examination, you will be only going through the your short notes. That will give you to fresh up, fresh in memory what you have learned throughout. Therefore, what you have been asked to study in 1 year, which I have been asked to put it in 3 hours, which as an examiner I have been asked to value it in half an hour. Therefore, then the most important, equally important part is how to write the examination. I think there is a wrong notion among the students that you should go with the serial order. You know, the first impression is the best impression. Therefore, don't stick on to the serial order. Your first answer should be the best answer, and allocate the time. Before you start 15 minutes reading time is there. That is for planning. Planning is a cornerstone for success. Therefore, if you are able to plan, the most important is plan your examination. You have to complete your examination within the 3 hours time. Therefore, the 15 minutes bonus time, which we people never had that privilege. Therefore, today, everything is available at a click of a download. The video classes, audio classes, the whole of the study material is available for a click of a download from the Board of Studies website. Therefore, it is most important you should know how to write the examination. Therefore, the best answer should be the first answer, and allocate the time. Don't overshoot the time. You allocate the time for 2.5 hours and keep 30 minutes cushion with you. Don't overshoot the question answer for more than 5 minutes, because even if you complete one question to the best of the satisfaction, probably out of 20 marks, you may be getting only 18 marks. But if you miss one question, that means out of that 20 which you know, at least 10 marks would have been assured. Therefore, your endeavor should be to answer all the questions. If you don't answer, if you don't know anything, please don't answer that question. That will expose your ignorance. Therefore, these are the basic broad tips. Therefore, I'm sure this paper is not difficult, and I wish you all the very best and happy learning. Thank you. Thank you very much for the Board of Studies for this opportunity.
Thank you, Babu sir. Thank you. Thank you for coming and motivating all our students. And you vast experience of Board of Studies. I know during your chairmanship only this all new syllabus has been drafted, and
yes,
what
sir.
a pen you have taken during that time. All we remember that, sir. You are the very core to the students' heart. I know that. Thank you very much for coming. Now over to Meenaji for taking the session. Thank you, boss.
Chairman Sushil.
Thank you.
Thank you. Yeah.
Thank you. Hello. Hello student, I'm CA Meena Verma, and in today's session I'm going to teach you about the about the subject Strategic Cost Management and Performance Evaluation, and the chapter which I'm going to teach you today is Introduction of Strategic Cost Management. So the chapter I'm going to teach you is the Introduction of Strategic Cost Management, right? And the topic which I'm covering in this session is what is Strategic Cost Management, why there is need of Strategic Cost Management over traditional cost management, what are the components of Strategic Cost Management, strategic framework for value chain analysis, superior performance and competitive advantage, value chain approach for assessing competitive advantage, right? So, our subject, this new subject, Strategic Cost Management, is completely based on strategies, right? There is difference between traditional cost management, which we have studied so far, and this new subject, strategic cost management, right? In earlier, we just considered the internal factors to decide business-related decision, right? However, in today's business environment, this business environment is extremely competitive and dynamic, right? It keep on changing, it keep on affecting by various factors, right? For example, recently, like lockdown due to COVID-19, it will going to affect our business, right? It will have impact on our business, right? So today's business environment is very competitive, very dynamic, and we should consider both internal factors as well as external factors for taking decision related to our business. While in traditional costing, which we have studied so far, we just take decision on the basis of considering only internal factors. So this is the difference between the old syllabus, old subject, traditional cost management, and the new subject, strategic cost management, where we consider all the factors and take the decision strategically, right? So there is difference considering only internal factors and considering both internal and external factors for taking decisions, right? For example, while taking decisions, we consider method of procurements of goods, nature of workforce, business process, managerial and administrative process, right? Warehouse distribution, marketing, sales, right? Post-sale services, and how political factors, how economical factors, how social factors, how technological, legal factors, right? How bargaining power of buyers, bargaining power of suppliers, threat of new entrant, right? Threat of substitute product, intensity of competition, how all these factors will going to affect your business, right? You should consider every factors for deciding decision related to your business and take decision accordingly, right? So okay. Right. So this is the beauty of our new subject that we take. So this is the beauty of our new subject that we consider both internal and external factors for taking decision related to our business, right? So strategic cost management is a cost management technique which improve strategic position of business and control cost, right? While in traditional costing, which we have studied so far, we just focus on controlling cost and reducing cost. While in new subject, we focus on cost management technique strategically, right? We take decisions strategically, right? So this new subject is a combination of two subjects which we have studied so far. It's a combination of cost management accounting and strategic management, right? Strategic cost management is integrating cost information with decision-making framework, right, for overall organizational strategy, right? So, in strategic cost management, we integrate all the cost information related decision for making decision, right, for taking decisions, right, and we make our strategic framework accordingly, right? So, there is difference between traditional cost management and strategic cost management. Traditional cost management, which we have studied so far, which is an old syllabus, right? We just consider internal factors, while strategic cost management, which is a new subject, right? We consider both internal and external factors to decide to take decision related to our business, right? Strategic cost management is based on long-term concept. We consider the long-term vision while taking decisions related to business, right? However, in traditional cost management, which we have studied so far, we just consider short-term concept, right? Okay, in traditional cost management, cost drivers are based on volume of the product, while in strategic cost management, it is based on the activities associated with the manufacturing of the product, right? Objective of traditional cost management is scorekeeping, right? Is scorekeeping, attention directing, problem solving, right? What does mean scorekeeping? Preparing income statement, right? In traditional cost management, our objective is to prepare income statement, right? Attention directing means preparing the budget report. Problem solving means comparing of cost of assessing possible course of action, right? Objective of traditional cost management is scorekeeping, attention directing, problem solving. Scorekeeping means preparing income statement. Attention directing means preparing budget report. Problem solving means comparison of cost of assessing possible courses of action. In strategic cost management, our objective is to attain either product differentiation or cost leadership, right? We want to become a cost leader or we want to have a product differentiation for our business organization. Traditional cost management, our primary focus is to reduce cost, while in strategic cost management, our focus is to reduce cost as well as improving the value for our customer, right? We focus on both cost reduction as well as we want to improve the value for our customer. Traditional cost management is a risk-averse approach. Risk-averse approach means in traditional cost management, we try to avoid taking risk while taking decisions related to our business. While in strategic cost management, it's a risk-taking approach. Why? Because while taking decisions related to business, we consider both internal, external factors. We consider all the factors while taking decisions, right? So it's a risk-taking approach because it has ability to adapt itself with changing environment. So now we are going to study about the components of strategic cost management. There are 3 components of strategic cost management: strategic positioning analysis, cost driver analysis, value chain analysis. So let us first understand what is strategic positioning analysis, right? Okay, so this is strategic positioning analysis. Strategic positioning analysis is an approach of researching what future environment might be in your internal corporate structure as well as external environment, and determine the choices of business strategies to get your current position to the desired goal. Okay, so strategic positioning analysis, it's an approach of researching what future environment might be in your current internal environment, right? You take current internal environment factors, you consider internal environment factor, you consider external environment factors, and you then accordingly formulate strategy to get your current position to the desired goal wherever you want to take your business. Okay, so this is strategic positioning analysis. In strategic positioning analysis, we consider internal factors, we consider external factors, and then we formulate our business strategy considering our business organization value, culture, and systems, right? So this is strategic positioning analysis. Now the next topic is cost driver analysis. Cost driver analysis can be divided into 2 parts: structural cost driver analysis, executional cost driver analysis. So what is structural cost driver analysis? The scale and scope of operation of a company will impact the cost. In your business, the number of output you are producing and the type of output you are producing will going to impact the cost. How? See, scale and scope of operation will going to impact your cost. How? Let us understand this. Large scale of operation is likely to give advantage. Large scale of operation is likely to give advantage of economy of scale. Now, what is economy of scale? Proportionate saving in cost gained by increased level of production. As you produce more quantity, you will gain advantage of proportionate saving in cost. So this is called economy of scale, and with the help of economy of scale, you will manage to reduce the cost of your product, right? So this is example of economy of scale. Bigger is often cheaper, right? If you are producing bigger quantity, huge quantity, right, you will able to purchase huge quantity of raw material, and accordingly you will get discount of purchasing the quantities, right? And when you are producing large amount of outputs, right, you will manage to reduce the cost per unit. So through this way, you will get the advantage of proportionate saving in cost. Next is usage of technology. Next is usage of technology and complexity of operation also determine cost of various activities within a firm. Next is learning curve will also impact the cost, right? Learning curve will also impact the curve, right? If you are here, your labor is unskilled labor, while if your labor become a skilled labor, he will become more efficient and he will take less labor cost per unit. So in this way, he will manage to reduce the cost. In this way, we will manage to reduce the cost of our business organization. Next is product development process. This is our product life cycle. Product development process could be costlier in earlier stage. Product cost is costlier in earlier stage of product development life cycle, right? And then later on, this cost may reduce. Next topic is executional cost driver. Executional cost drivers are based on firm's operational decision on how the various resources are employed to achieve the goal of business organization. Executional cost drivers are determined by management style and policy. It includes participation of workforce toward continuous improvement, importance of total quality management, just-in-time process layout, effective use of staff, efficiency of plant layout, etc. So this is executional cost driver. It is based on firm's operational decision, how various resources are employed to achieve goal and objective of business organization. Now next, value chain analysis. First of all, value chain was introduced in 1985 by Michael Porter. Value chain. Let us define it. What is value chain? I hope you can see this image. Value chain, a chain of value-added activities, a chain of value-added activities which identifies and analyze various activity that added value to your final product, right? You can see you are using a raw material, and this raw material is going under various activities, and then you are getting your final product, right? So what is value chain? A chain of value-added activities, product passes through these activities in a chain, gaining value at each stage. So this is value chain. A chain of value-added activity. Value chain is a chain of value-added activity. Your product passes through these activities, gaining value at each stage. This is value chain. Now we are doing value chain analysis. What is value chain analysis? Value chain analysis is a process which identify and analyze various activity that add value to final product. What will we do? We will try to find out in these activities. What are the activities which add value to our final product? We will keep that activity and we will try to remove all those activities which do not add value to our final product. We will try to eliminate all the activities. We will try to eliminate all the activities, all the process which do not add value to your final product, because these activities are just waste and we are just wasting our resources on these activities, which will result in increasing the cost. So if we manage to remove all the non-value added activities, we will manage to save our resources, and this way we will manage to reduce the cost of our finished product, whichever we are producing. Identify those activities which do not add value, right? These are non-value added activity, and all the resources must be developed in those value added activities. Okay, so we should use our all the resources in only value added activities, and we should try to eliminate all the non-value added activities from our process, our business processes, right? So this is our value chain. This was introduced by Michael Water, and these are all primary activities. It includes inbound logistic, operations, outbound logistic, marketing and sales, services, and these are supporting activities. These are the activities which support the primary activities. It's firms, infrastructure, general management, accounting, finance, strategic planning, and human resource management, recruitment, training, development, technological development, procurement, right? These all are activities which support the primary activity of business organization. So this is our value chain. It's a very important concept. Now next is strategic framework of value chain analysis. We have a strategic framework of value chain analysis. It includes industry structure analysis, core competence analysis, segmentation analysis. So first of all, let us understand what is industry structure analysis. Industry structure analysis is also known as Potter's 5 forces analysis. It includes bargaining power of buyer, bargaining power of supplier, threat of substitute product or services, threat of new entrant, intensity of competition amongst firm. So let us understand it. What is this? Bargaining power of buyer. Higher the bargaining power of buyer, lower is the profitability of business organization. If buyer are concentrated, that is, if there are less number of buyer in the market, or volume purchase is very high by the buyer, or if cost of switching supplier is very low, buyer can easily switch the supplier. In such cases, bargaining power of buyers are high and they will reduce the profitability of the organization. Buyers are in position, if bargaining power of buyer is high, they are in position to dictate the terms and condition. Okay, a large company have high bargaining power when they buy from small suppliers. Large companies have high bargaining power if they buy from small suppliers. Now next is bargaining power of supplier. Higher the bargaining power of supplier, lower is the profitability of business organization. When input is important to the buying firm, right? Whichever supplier is important for buying firm, right? If input purchase by the company is important for the organization, in such case, such supplier will have high bargaining power. When there are few suppliers in the market, when unit supplied by the supplier is less, right? Supply is less. In such case, buyer have high bargaining power. When the cost of switching supplier is high, buyer can't switch the supplier easily. In that condition also, supplier have. In that case also, supplier have high bargaining power and it will going to affect the profitability of business organization. And in such case, if the supplier have high bargaining power, he will be in a position to dictate the terms and conditions. Okay, now the next is threat of substitute product or services. When substitutes are available in market, which can be from within the industry or from different industry, customer can switch easily. lower, and if a customer can switch easily, if there is threat of substitute product in the market, then you will have low profitability. Competitive pricing is required to retain. In such case, you need to have competitive pricing, and it's a serious problem. We have an example like paper industry is facing threat from electronic book market. Similarly, we have another example. If more people switching to public transport as metro, demand of vehicle will come down. So in this way, substitute product will going to impact our business organization. Next is threat of new entrant. If there is a high profitability and low entry barrier in any industry, there is high profitability, right? Organization can earn high profit and entry barrier is low. Any new entrant can enter the market easily, right? This will lead to excessive supply and reduce prices. However, if entry barrier will create it, if you try to manage to create an entry barrier, then it will create an entry barrier for the new entrant. And how can you create these entry barrier? If the market is intensive capital requirement, or if sophisticated technology is required, or if there is some legal factors, or if there is a high exit barrier, right? Or if there is limited access to raw material and labor. In such case, entry barrier will be high and it will prevent the entry of new entrant. So in wherever you are, whichever kind of business you are, you should try to create entry barrier for the new entrant so that you can create a wall for the new entrant and you will manage to earn profit in your organization. We have an example like airline industry where only few new firms enter in the business. In airline industry, very few firms entered the business because airline industry require high capital. Now next is intensity of competition amongst the rivalry firm. Intensity of competition will affect the profitability of business organization. Some markets are more competitive than others. Competitive rivalry is higher when industry has high number of firms. So I have this image as an example. You can see it's a perfect competition market, and then it's a monopolistic market, then it is a oligopoly market, and this is a monopoly market. So if you observe in perfect competition, there is the highest competition because there are large number of firms present in this market. So intensity of competition is highest in case of perfect competition market, while in case of monopoly market, intensity of competition is lowest. Why? Because there are very few number of firms, or might be you are the only one in the market who is producing the goods or services, right? So the intensity of competition is very low if the number of firms in the market is less, and intensity of competition is very high if there are a lot of firms, those who are working in the same industry, right? So in this way, intensity of competition will affect your profitability, because if there are large number of firms, it will reduce your profitability, and if you are the only one in the market, in that case you will manage to earn a lot of profit from the organization, for your organization. Okay, now the next topic is core competence analysis of strategic framework. What is core competence analysis? Core competence is a distinctive or unique skill or organizational structure, resources, or technical know-how that create distinct customer value. We want to create, every organization wants to create distinct customer value, right? If you manage to create distinct customer value, you will be able to quote premium price for your product or your services, right? So you should try to create distinct customer value. How can you create distinct customer value? By giving a unique, by distinct or unique skill, or by having such organizational structure resource, or having such technical know-how. Okay. So there are 3 tests of core competency. End product benefits, access to wide variety of market, difficult for competitor to imitate. Let us understand this with the help of an example. I have an example of Google company. We all know that Google have monopoly. It has reached almost the world, right? And it is not easy to imitate the algorithm of the Google. Whenever you try to search information on Google search engine, algorithm of Google act, right? And it is very difficult to imitate the algorithm of Google. So let us see whether Google is satisfying the condition of core competence. What are the conditions for core competence? Whether there is any end product benefit, access to wide variety of market, difficult for competitor to imitate, right? So let us see whether Google have these core competence. Yes, Google have these core competence. Google has delivering excellent search engine. It has end product benefit. And it has access to almost the world. It has wide variety of market, and it could not be imitated by the competitor. It is very difficult to imitate the algorithm of the Google. So it is very difficult to imitate Google, algorithm of Google. So difficult for the competitor to imitate Google. So in this way we can see that Google has core competence. Core competence is a primary source of competitive advantage. Every organization wants to gain competitive advantage, and core competence is a primary source of core competence. Core competence is a primary source of competitive advantage. Competitive advantage could be result from cost leadership or product differentiation. I have an example of cost leadership. Parle G company, it is a cost leader. It is producing the highest quality of biscuits at very low price. And product differentiation, I have some example of product differentiation also. Okay, what if any business organization lost core competence? Lost core competence? Core competence means end product benefit, access to wide variety of market, and difficult for competitor to imitate. So if you lose your core competence, these core competence, then what happened? We have an example, Nokia. Nokia was a market leader, and when smartphone introduced in the market leader, Nokia was a market leader, and when smartphone introduced in the market, Nokia lose its core competence. Similarly, Bajaj scooter lost its core competence on introduction of motorbike. Thus, firms continuously evolve their core competence. So now we can conclude that every business organization should continuously evolve their core competence, considering the environment, considering all the factors of external environment, internal factors, and continuously keep on evolving your core competence to remain competitive in market and remain relevant for ever-changing business environment. Okay, so this is all about core competence, loss of core competence in market. Now the next topic is core competence have its origin from 2 sources. First is resources, another one is capabilities. Resources and capabilities. Core competence has its origin from these 2 sources. First, resources. What is resources? Resources are the factors that enable a company to create value for customer. You are creating value for your customer because you have resources, you have such resources which you are using to create value for your customer. So resources can be tangible, resources can be intangible. The more difficult a resource to imitate, the more valuable is your resource for the organization. For example, algorithm of Google. right? It is very difficult to imitate algorithm of Google, and therefore algorithm of Google is a very valuable resource for Google. Similarly, if you know that Coca-Cola have a secret recipe for its syrup, right? So the syrup of Coca-Cola is a valuable resource for Coca-Cola company. It's very difficult to copy this formula of syrup. Nobody knows in the world that what are the method of producing these syrup. So it's a valuable resource for Coca-Cola company. Now next is capability. Capability refers to the company's ability to coordinate resources and put them to productive use. So capability is ability of company to coordinate various resources of organization and put them to productive use. Now we have step for applying value chain to core competence for competitive advantage, right? Steps for applying value chain to core competence are: first, validate core competence in current business organization. Business organization will lose market if it lose core competence. We have example of Nokia, we have example of Bajaj scooter. They lose its core competence. If they lose its core competence, they are out of the market. So therefore, existence of core competence should be validated continuously. Business organizations should continuously evolve their core competence. Next is leverage competencies to the value chain of other existing business. A core competence in one segment of your business can be used in another segment, another new product or existing product, right? Another new business or existing business for your business organization. For example, if you have an excellent distribution network in your business, you will be able to launch a new product in the market. Or if, for example, if a bank has a wide network of branches, same network can be used to launch some other product like insurance product. Now, next is use of core competence to reconfigure the value chain of existing business. If you have a core competence, you are evolving your core competence, then such core competence will help your business organization to reconfigure. While firms may manage their existing value chain better than the competitors, sophisticated firms may use their core competence to reconfigure, rearrange the value chain to improve its return, to improve its profitability. Otherwise, competitor may exploit the opportunity. If you will not do, your competitor will exploit the opportunity, right? So you should continuously evolve your core competence, and it can be used to reconfigure the value chain of your existing business organization. Next is use of core competence to create new value chain. With strong core competence in its existing business can be used to develop new value chain. If you have a strong core competence, you can use this core competence to develop a new value chain through which you can introduce a new product, new services, you can seek new customer, you can capture a new market, right? We have an example, for example, FedEx transfer its expertise in its delivery of small packages to contract of its new business with LL Bean. It's an example. Now the next strategic framework is next topic of strategic framework is segmentation analysis. Okay, so segmentation analysis is the next topic. So what are the steps involved in segmentation analysis? These are the steps. These are the steps which I'm going to explain you in detail. First step is identify segmentation variables and categories. An industry might be divided into multiple segments. Segmentation can be on the basis of value. I have an example of segmentation on the basis of value, or segmentation can be on the basis of on the basis of geographies or on the basis of product or customer. So I have some example of segmentation. So first of all, you should identify segmentation variables and categories. An industry might be divided into multiple segments based on value of product segmentation, or geographies, or customer, depending upon the nature and complexity of industry. So what will you do? Depending on the nature and complexity of your industry, you will try to identify the segment for your business organization. Next, after identify the segment of your business organization, what will you do? You will try to construct a segmentation matrix. What is segmentation matrix? After identifying the segment for your business organization, you will create a matrix. Generally, it's a two-way matrix. For example, like a matrix of ITC company. You know that ITC company is producing food, cigarettes, lifestyle retailing, education and stationery. So you can create a two-way matrix. On one side you can keep the cigarette, hotel, textile, paper, etc., and on the other side you can keep the geographies like north, east, west, south. So in this way, two-way segmentation matrix can be created. Similarly, a segmentation matrix can be created based on the product and distribution channel. So next step is to create a segmentation matrix. Then the next step is analyze segment attractiveness. Segmentation matrix could be used to evaluate the profitability and performance of each of the segments. So we have created a segment matrix, and then we will evaluate it for the profitability and performance. Now the next step is identify the key success factor for each segment. Each segment identified must be assessed with the relevant performance measure. It could be quality of product, service, timeliness of delivery, right? You will analyze each segment matrix on the basis of performance measure, right? A single performance measure cannot be applied across all the segment. For example, you have all these segments, right? So same performance measure you cannot apply to, if you are applying, suppose you are applying some performance measure to food, you cannot apply the same performance measure to education and stationery. For example, you are applying some performance measure to cigarette, you cannot apply the same performance measure to education and stationery. So same performance measurement cannot be applied to all the segment of business organization. A measure which suits the service segment will not suit the manufacturing segment. So same performance measurement cannot be applied to all the segments. Now, so for each segment, you have to apply different performance measurement. Now, analyze the attractiveness of broad versus narrow segment scope, right? So, in this point, it is mentioned that any business organization should not focus on a narrow segment. Narrow segment means, for example, a company is producing only goods related to foods, right? It's a narrow segment. For example, a business organization is producing goods only related to education or stationery. So it is mentioned here that a business organization should not focus on a narrow segment. Or I have another example of narrow segment. For example, a business organization is working geographic-wise segmentation of a particular segment of geography. So a business organization should not focus on a narrow segment. Instead, a business organization should focus on a broad segment. Generally, narrow segments could be risky and a single segment could be vulnerable to competition, while multiple segments can help the business organization to spread the cost across the various segments. The company might also be in a position to use the competency of one segment in another segment. So, if a business organization have broad segmentation, for example, ITC or Tata company have a broad segmentation. They are producing their goods or services in different segments, right? So, core competency in one segment can be used in the core competence. It can be used in another business segment. So, this is how broad segment help your business organization. some firm might abandon certain segment because of the lack of profitability, and you can even you can even leave some segment if it is not profitable for your organization, and you can focus on the segmentation which is more profitable for your business organization. So this is how you should analyze the various segment of your business organization, and you should focus on a broad segment which will help your business organization. This is an example of value-based segmentation, right? I have an example of value-based segmentation where an industry is divided, various process and activity of an industry is divided on the basis of their values, right? This is a segmentation on the basis of value. Now the next is superior performance and competitive advantage. Superior performance is required to attain competitive advantage. How can you get the competitive advantage? Either through cost advantage or product differentiation. Cost advantage means you are supplying the similar product at lower price. Product differentiation means you are charging premium price for your unique product. Now, what is competitive advantage? A firm's overall competitive advantage derives from difference between value it offers to customer and its cost of creating that value. I have an example. This is a progression of economic value. Value of commodity is less here, and it gain more value for this product, and then it gain more value for this product, and then it gain more value for this product, right? So this is a progression of value of a product, and if higher the value, if you will give higher value for your product, higher value at less cost. If you are giving your product high value, and at least cost, you will get the advantage of competitive. You will get competitive advantage. So competitive advantage can be of two types: cost leadership, product differentiation. Either you are producing your good, a high value of good at low cost, or you are doing product differentiation. It is a market strategy that business uses to distinguish its product in the market, and you are charging premium price for distinguishing of its product. To attain competitive advantage, a firm must have distinct competency. Distinct competency can be achieved by product differentiation or low cost. Okay, now let us understand in detail what is product differentiation. Product differentiation is a process of distinguishing a product or services from other to make it more appealing from other, right? So how can you get the product differentiation? Either you change the form, you create such form of your product, or you give such features to your product, or you are giving customized product or performance based product. You are giving such performance which nobody is giving in the market, or you have such quality in your product that nobody is giving in the market, or you have such durability in your product or services, or such reliability in your product or services, or such repairability, or such different style in your product, which gives your product differentiation, right? So product differentiation is a process of distinguishing a product or service from other. So in this way you can get product differentiation. If a customer perceive a product or service as a superior, they become more willing to pay a premium price. So if you get the product differentiation, you can charge a premium price from your customer relative to the price they will have to pay competing. Okay, now we have an example of product differentiation. For example, Apple company has product differentiation, and it charges premium price for its product differentiation. Now next is differentiation advantage: superior quality, superior innovation, superior customer responsiveness. Superior quality means better quality in similar price range. Superior innovation means innovating product ahead of its competition. Superior customer responsiveness align with customer expectation, means reducing the waiting time or delivery time. So you should do this for your product differentiation. It will give you product differentiation advantage. Now next is how to create cost leadership, how to become a cost leader. A firm enjoy relative cost advantage if total cost is lower than its competitor. So reducing the total cost of your product strategically, right? You should focus on reducing cost while improving the value for your product, right? Reducing cost doesn't means to sacrifice the value for your product. Reducing cost doesn't means to sacrifice the quality of your product, right? So cost leadership can be achieved only when you are giving your product, you are producing your product at low cost, but at the same time maintaining the value for your product, maintaining the quality for your product. This relative cost advantage enable a business to do one of the following steps. If you achieve this cost leadership, you can do either one of the following steps. What first step is to charge. First, what you can do, you can charge less selling price, right? If you are, why you are managed to sell your product at less selling price? Because you are managed to reduce the cost of production for your goods. If you manage to reduce the cost, you can sell your product at low selling price. If you sell your product at low selling price compared to your competitor, you will manage to expand your market, or you will even manage to get the customer of your competitors, right? So in this way, you can increase the profitability of your business organization. Another way is not to reduce the selling price. You are selling your product at the same price which your competitor is selling, but still you will get the benefit. You will gain the profitability, because though you have not reduced the selling price, but you managed to reduce the cost, right? So selling price is same, but you managed to reduce the cost. So in this way, you manage to maintain the profitability or increase the profitability, because selling price is same, but you reduce the cost. So in this way, you manage to increase the profitability for your business organization, right? There are some way of reducing cost through value chain analysis. I have some example of reducing the cost through value chain analysis. First is copying rather than creating designs, right? There are some organizations, those who do not produce everything at their own, they do not do all the research and all and produce everything, every process, every activity. Sometimes they imitate other, right? Some process, some activity, they imitate other, right? So in this way, if you do not create everything, and instead of creating everything, copy something and then add your own creativity, in this way you will manage to reduce the cost, right? So this is one of the strategy to reduce the cost. Another strategy is using cheaper material and other cheaper resources, right? If you are using cheaper raw material, cheaper resources, you will manage to reduce the cost. Another way is reducing the labor cost, increasing the labor productivity. Next is attaining the economy of scale, right? Economy of scale, I have already told you that economy of scale can be get by producing high volume of product. If you are producing high volume of product, if you manage to sell high volume of product, then you can reduce the cost of your product, right? You will get proportionate saving in cost. Next is use of high volume purchasing to get discount. If you are buying high volume of product, you will get bulk discount. If you are purchasing your goods, if you are purchasing the raw material in bulk, you will get bulk discount. Locating in area where cost advantage exists, right? You should locate your business in such an area where you can get the cost advantage. For example, government gives subsidy. If you are doing your business in Himachal Pradesh or somewhere where government is giving you subsidy, in such way you will manage to reduce the cost of your business organization, right? Gaining advantage from learning curve, right? You can gain the advantage of learning curve, and you will manage to reduce the cost of your product. And there are some example of cost leadership. For example, Parle-G is a cost leader. Parle-G is selling its product at very less price, and though it's selling its product at less price, it has maintained the quality of the product, right? Now the next topic is value chain approach for assessing competitive advantage. Value chain approach for assessing competitive advantage. For assessing competitive advantage, we can do internal cost analysis, we can do internal differentiation analysis, we can do vertical linkage analysis. So first of all, let us understand what is internal cost analysis. These are the steps. Following are the steps for carrying out internal cost analysis. Let us consider it in detail. Internal cost analysis. How to do internal cost analysis, right? For gaining competitive advantage. You want to gain competitive advantage, so you are doing internal cost analysis. First step is to identify firm's value creating activity. What you should do, you have a value chain for your business organization. You should try to find the activities which increases the value for your product, which is activities which are value added activities, and you should try to find out the non-value added activities also and try to eliminate all the non-value added activities. What happened in traditionally business organized themselves as a cost center or revenue center or profit center. This was a traditional technique, right, where business organization function in hierarchy, right? In traditional technique, business organization work in hierarchy, while in strategic cost management, business organization do not work in hierarchy. They work in a team. Right? So in strategic cost management, they do not consider cost center, revenue center, profit center. Instead of this, what they do, they create a value chain for their business organization, and they try to find out all the value added activities for their business organization. We have an example right now. So first step is try to identify the value creating activities. So this can be done by considering the value chain of your business organization. Now next is determine the proportion of total cost of the product or service attribute to each value creating activity. So these are all value creating activity for your final product in your value chain, right? What should you do? You should try to find the total cost of the product and service attribute to each. Now, your total product has some total costs, right? And these costs are generated from all of these value creating activities. Now, you should try to find out the value of all these value creating activities. So, this is the next step. Try to find out the cost of all these value creating activities. Right. So this step involves finding out the cost of each value creating activity, both primary activity as well as secondary activity. So first step is to find all the activities in your value chain, right? Second step is to find out the cost of all activities in your value chain, right? And next is to try to find out the cost driver for each activity. First step, what we have done, we find the value added activities for our business organization. Second step, what we have done, we have find the cost of each value activities. Now the third step is to find the cost driver for each value activities, right? Find out the cost driver for each value activities, and company can use activity based costing also, right? Earlier in traditional method, company do not use activity based costing. They consider either product based or labor hours for the cost allocation. Right. Now, next step is try to identify the link between the activities. So we have these activities, we have find out the activities, we have find the cost of these activities, we have find the cost driver for each activities. Now, the next step is try to find the link of the activities. Right. Value chain analysis consider individual value activities as a separate and discrete. Right. In value chain activities, these activities are considered as separate and discrete. However, these individual activity do not function independently, right? These activities do not function independently. Generally, these activities are interdependent. These activities are dependent on each other, right? For example, if you try to automate some of your, for example, if you try to automate, it might reduce the labor hour, but it will increase your information technology, right? So in this way, one activity is interdependent on another activity, and hence if you take any decision related to cost or any other decision for any of these activities, this will have impact on another activity. So you should consider all such interlink between the activities while taking decision for the business organization. Right. Next step is evaluate the opportunities for achieving relative cost advantage. Now find out the opportunity to reduce the cost, right? We have find the activity, we have allocate the cost for each activity, we have find out the cost driver for each activity, right? We have find the interlinkage between the activities. Now try to find out the opportunity to reduce the cost. Right. What happened traditionally? Traditionally, they reduce the cost across all the functions, right? They reduce the cost under all heads, like reduce 15% from all heads, right? Reduce the administrative costs, reduce the marketing costs, reduce selling and distribution costs, reduce all costs by 15%. But this method is not correct. This is not a correct method, right? What should we do? We should not reduce the cost all under all head, right? What should we do? We should try to reduce the cost individually in each activity, right? Every activity have its own opportunity to reduce the cost. Some activities need to reduce the cost, while some activity might not require to reduce the cost, or might be some other activity require higher cost, right? So you cannot apply the same level of cost reduction to all the heads. You should consider the activity and try to find out whether there is any scope of reducing the cost or not, right? I have an example. For example, reducing the manufacturing cost often means negotiating with labor for lower wages or moving production to countries or place with cheaper labor cost, right? For example, you want to reduce manufacturing cost. What can you do? You can either negotiate with your labor, right, for their wages, or you have another option to shift your manufacturing unit to some other countries or other place where you can get cheaper labor, or you can even shift to the place where you can get cheaper raw materials. So in this way, you can reduce your cost in some activity. Supplier might be willing to drop their price if the company negotiate long-term contract. Supplier might be willing to drop their price if you are suppose you are contracting with the supplier and you are buying the quantity in bulk, you will manage to get a bulk discount. Or if you contract with the supplier for longer term, you will manage to get some price reduction on your raw materials. So in this way, for different activity, different strategies work. For different activity, different strategy to reduce the cost work. And it's not necessary that cost reduction is possible in all the activities. There might be possibility in some activity to reduce the cost, while in some other activity it is not possible for you to reduce the cost. So in this way, internal cost analysis can be done. Now the next topic is internal differentiation analysis. Firm must identify and analyze value creating process and carry out differentiation analysis. So what we are trying to do? We want to do differentiation analysis, internal differentiation analysis. What are the steps? Identify customers. These are the steps. Okay, I'm explaining you in detail. For example, we have two companies, company A and company B. Both the company have its own value chain, right? They have their own activity of value chain, and their activity might not be same, right? For example, inbound logistic of company A and company B can be different. Operation of company A operation means converting raw material into finished good can be different for both the companies. Outbound logistic can be different for both the company. Marketing and sale techniques can be different for both the company, right? After sale services can be different for both the companies, right? So it can be different for both the companies, right? Right. So activities of both the company cannot be same, right? For any organization, for every organization working in any industry, even if they are working in the same industry, their value chain activity cannot be same. It must be different. So identify customer value creating activity. Now what should you do? You should try to find out in your value chain the value creating activities which create value for your final product. Now next step is evaluate differentiation strategy for enhancing customer value. Now try to find out such strategy through which you can enhance your activities, right? You can differentiate your activities from your competitors, right? For example, this is my competitor, this is my company, and he is my competitor. I want to differentiate my operation method from the operating method of company B, or I want to make my marketing or selling technique different from my competitor, right? So in this way, every business organization should try to distinguish its activity, its value chain activity from its competitor, right? For this, you have to evaluate the differentiation strategies so that you can enhance your customer value, right? Evaluate the various strategy which you could enhance the customer, through which you can enhance the customer value, right? What can you do? For example, you can improve your marketing and distribution channel, right? You are providing on-time delivery, right? I have an example. For example, this is a Domino company and this is Pizza Hut, right? Why Domino's is so famous as compared to Pizza Hut? Because Domino's is providing you a pizza quickly, 30 minutes, right? Within a 30 minutes. So they are giving your product quickly, on time delivery, right? So in this way, what Domino's has done, Domino's has differentiate its marketing and selling strategy from its competitor Pizza Hut, from the marketing and selling strategy of Pizza Hut. So in this way, you can differentiate any of your business activity from your competitor to gain competitive advantage. Now, next step is determine best sustainable differentiation strategies. A company should identify the activities which could enhance the differentiation. Company must identify those strategies which could create sustainable differentiation. The selection of strategy must be according to availability of resources. So what should any business organization should try to do? Business organization should try to identify the activity which could enhance the differentiation. A business organization should first try to find out the activity. First you try to identify the activity in your business organization which could enhance the differentiation. For example, in Domino's, on-time delivery this is an on-time delivery is an activity which enhance the differentiation from Pizza Hut or any other quick service restaurant, right? Company must identify those strategies, and then company should identify the strategies for differentiation and all, right? Okay. Now the next topic is vertical linkage analysis. Vertical linkage analysis, a company generate competitive advantage not only through linkage of internal process within the firm. So this is the internal linkage inside the business organization. Internal linkage means how inbound logistic is related to operation, or it is related to outbound logistic, or it is related to marketing and sale or service, right? This is interlinkage, right? This is linkage of internal process within a firm. Now, this internal linkage is but this linkage, it should also link with the supplier and buyer. The linkage between the firm's value chain with the supplier is downstream, and the linkage of firm's value chain with the buyer is upstream information flow, right? A company generates competitive advantage not only through linkages of internal process within a firm, but also through linkages between the firm's value chain and that of the supplier and user. So if the business organization want to gain competitive advantage, it should not only find the linkage between the internal process of the firm, but it should also try to find out the linkage of firm with the supplier, as well as try to find out the linkage of firm with the buyers, right? A vertical linkage analysis include upstream and downstream activities. Upstream activity is related to buyer's activity, downstream activity is related to supplier's activity. This vertical linkage analysis begin at source. This linkage begin at the source of raw material and at the customer, the one who is consuming your final product. A company's value chain is different from industry value chain. Company's value chain. Okay, now the next is that company's value chain can be different from industry value chain. For example, I have an example of industry value chain, right? This is an example of automotive industry value chain. This is an example of industry value chain, right? Automotive industry value chain. It includes supply chain activity, manufacturing activity, product support activity. So you can see there are different segments of industry value chain, and your business organization is not working in all these segments. You might be, for example, you might be working on this product development, right? So your value chain will be different from the value chain of whole industry. Right, this is given here. A company's value chain is different from the industry value chain. A company must have an understanding of not only its internal value chain, but also industry value chain. So every organization should not only understand, right? They should understand the activities of this entire industry. Right. Hence, it might not have information. It might be possible that this company might not have information of all these segments, cost or revenue related information of each of the activities in the value chain of industry, right? Or the cost driver, but it required to understand the information of entire value chain of the industry. For example, a company manufacture cars using various components like chassis, steering wheel, tires, axles, etc. The company does not manufacture all the components in-house and are purchased from the third-party supplier. Company is focusing on assembly line, which is its core competence. So, for example, there is a company and its core competence is assembly. Right, it is not purchasing all the components from, it is not producing all the components in-house, right? What it can do, it can do cost benefit analysis, and accordingly it can make and buy decision considering the strategic environment also, right? And in this way, it can decide what part should be buy for this assembly and what part should be built in-house, right? Generally, in such case, if there is some copyright issue or if there is some secret manufacturing technique, such process will be done in-house, right? Or if you manage to reduce the cost, you will outsource your product for the manufacturing. So in this way, you do all this analysis of industry value chain and then take decision strategically, which will be helpful for your business organization. You just don't consider the cost, but you should consider the decision strategically. Is value, mission, VIMOSA, we called it VIMOSA, vision, mission, objective of business organization. What is this? Mission statement. Company's mission statement is a statement of company's reason to be, right? What is mission statement? It is a statement of company's reason to be, right? In mission statement, you try to find out the answer of these questions, right? I have an example. With the help of example, I'm going to explain you about the mission and vision statement. Company's mission statement is a statement of the company's reason to be, and company's vision statement is what the company would like to achieve, right? So vision statement is something which is related to future ambitions, right? We have an example, for example, Google company. We have vision statement and mission statement of Google company. What is the mission statement of Google company? To organize the world's information and make it universally accessible and useful. So what we have studied, that mission statement, in mission statement, we try to find out the answer of these 4 questions. What kind of service or product will it offer? What is the primary market it's offering? What type of customer does company seeks to target? What is the area of operation? So let us see whether we are getting the answer of these questions in the mission statement of Google company. Mission statement of Google company is to organize the world's information and make it universally accessible and useful. So let us see whether we are getting the answer of these questions. What kind of service and product will it offer? We are getting this answer from the mission statement. Google wants to organize the information. So what kind of service it is offering? To organize the information. What is the primary market for the Google? World is the primary market for the Google. What type of customer does the Google company seeks to target? Google company is providing its services to the user of information, and we are getting this answer from this mission statement. What are the area of operation of Google company? Make information universally accessible. So from the mission statement of Google company, we are getting the answer of all these 4 questions. Right. Now, what is the vision statement? Vision statement is what company would like to achieve in future, right? It is generally related to future ambition, right? Let us see the vision statement of Google company: to make search engines so powerful they would understand everything in the world, right? What they want to do? They want to make their search engine so powerful that it would understand everything in the world. Now the next is, what are the objective or goal? The purpose of objective or goal statement is to satisfy what need to be done in order to attain company's mission and vision, right? So the objective or goal statement will specify you what you need to do in order to attain your mission, your vision, what you need to do. Right. Goals should be precise and measurable, as well as challenging and realistic. Okay. The last topic which I'm going to teach you is so quickly. So the last topic is value shop model. This value shop model is a kind of value chain, right? Value chain analysis also include value shop model. Value shop model or service value chain. What is this? We have this image of value shop model. Value shop model or service value chain was introduced in 1998 by Charles B. Stable and Mr. Olson. Its aim is to serve companies from service sector, right? So value shop is generally applicable for the companies or organization of service sector. This model best apply to telecommunication companies and insurance companies and bank whose business is essential mediating between customer with different financial needs. Right. So, what is the difference between value chain and value shop model? Value chain is based on adding value at different activity of business organization. Right. However, value shop model, this approach is designed to solve the customer's problem rather than creating value by producing output from input, right? So value chain model was based on creating value, right? While value shop model is designed to solve the customer's problem, right? In value shop model, no value addition takes place. It only deal with problem. Value shop model deal with the problems, figure out the main area required services, and finally came with solution. Value shop mobilizes the resources of business organization to solve some specific problem of your business organization. Value shop is an iterative process, right? Secondary activities of value shop is same as that of value chain. But in value shop, they are dealing with problem finding and acquisition, problem solving, choosing among solutions, execution, control, and evaluation process, right? So this is all about chapter 1, Introduction to Strategic Cost Management. So we have revised this chapter and I'm going to take your queries now. And you all students can send your queries to me and I'm just checking your queries. And accordingly, we will consider the topics to discuss more in detail. Hello student, I am taking query session. We have already revised chapter 1. I am taking query session. Please send your queries. I am taking query session. Please send me your queries. We have already revised chapter 1 and now it's a query session. We will discuss the topic accordingly in detail according to your queries, right? Send me your queries. It's a query session. Please send me your queries. Hello. Sir, actually I'm trying to find out the questions. Okay.
लेफ्ट साइड में डैशबोर्ड में लेफ्ट साइड में क्यू फाइनल मॉर्निंग
डैशबोर्ड में हाँ जी सर क्यू फाइनल मॉर्निंग आ रहा है.
हाँ बस इस पे क्लिक करो.
ओके सर. इसमें डाउनलोड क्वेश्चंस का ऑप्शन आ रहा है सर, इसे डाउनलोड करना है?
नहीं इसी पे क्लिक कर दो क्यू फाइनल मॉर्निंग पर.
सर ये तो ओके सर, इसमें नेम ईमेल आईडी और प्लेस आर
भेज रहा हूँ आप फोन.
सर आप ना मुझे सेम लिंक सर आप मुझे सेम लिंक ना जीमेल आईडी में सेंड कर दीजिए, मैं अपने दूसरे लैपटॉप में खोल लूंगी.
मैं आपको व्हाट्सएप पे भेज रहा हूँ. अभी टाइम हो जाएगी फिर. ठीक है मैं आपको भेज रहा हूँ, व्हाट्सएप कर रहा हूँ आपको.
Query session. Okay, in chat box. Sir, actually, I'm opening through my phone right now. Okay, so I have query. If possible, could you repeat the concept of vertical linkage analysis? Okay, let me revise this. If you want me to revise this topic again. Another query is difference between value shop model and value chain analysis. Okay, most of the students are requesting me to explain the topic, to re-explain the topic of vertical linkage analysis. So let us first discuss this topic, vertical linkage analysis, because most of the students are requesting me to revise this topic again. Okay, let us revise this topic, vertical linkage analysis again, because most of the students are requesting me to revise this topic, right? Okay, what is vertical linkage analysis, right? We know that there is interlink between the activities within the business organization. We know that every business organization have their own value chain, right? And in value chain, they divide their activities, right? And these activities are interlinked. So in business organization, internal process are linked together. However, not just the internal process, these process are also linked with the supplier, and these internal process are linked to the supplier, as well as these internal process are linked to the buyer, right? So vertical linkage is the linkage of firm process with the supplier and with the buyer, right? A company generates competitive advantage not by linkage of internal process within a firm. You will get the competitive advantage if you understand the linkage of firms with the supplier and with the buyer. The linkage of firm with the supplier is downstream information flow, and the linkage of firm with the buyer is upstream information flow, right? And we should try to understand this linkage. So vertical linkage includes upstream and downstream activities. Upstream activities means firm's activities which is related to the supplier, and downstream activities which is related to buyers. Where's my pen? Okay. This vertical linkage analysis begins from the supply of raw material. This vertical linkage analysis begins from the supply of raw material, and it ends at the point of consumption of raw material, right? So this vertical linkage analysis is a broader concept, while value chain analysis is a shorter concept. Value chain analysis is just related to firm's internal process, right? It is related to internal activity of the business organization, inbound logistic operation, outbound logistic marketing and services, right? Interlinkage between the various activity inside the, in the business organization, while interlinkage of these internal activities with the supplier and with the buyer is vertical linkage analysis, right? And the linkage of this firm process with the supplier is downstream, right? It's downstream, and linkage of this firm with the buyer is upstream, right? So this is vertical linkage, and we should analyze everything from the purchase of raw material from the supplier to the consumption of finished good by the buyers or consumers, right? So in vertical linkage analysis, we do analysis from the source of raw material to the consumption of finished good, to the final delivery of finished good to the consumer, right? Right, and why it is necessary to understand the vertical linkage analysis, right? This is the vertical linkage, and why it is necessary to understand this vertical linkage analysis, because value chain of a firm might be different from the value chain of complete industry, right? Value chain of a particular firm might be different from the value chain of complete industry. And if you are working in any industry, you should not only understand all the activities of your own business organization, but you should also try to understand the activities of all the activities of your industry, right, in which you are working. So you should try to understand all the activities which take place in your industry, so that you can formulate your business strategies accordingly to gain the competitive advantage, to increase your profitability accordingly, right? We have an example of a car company. Suppose a car company, its core competence is to assembly of product, right? A company was engaged in assembly of product. Its core competence was to assemble the product, right? But instead of just assembling the product, it is taking some other decision also. For taking other decision, it is analyzing the entire industry of automotive, right? It wants to know from where, what product it can purchase and what product it can produce in its own organization. Generally, they try to produce the product which have some secret formulas, right? Or if there is any cost benefit analysis. But while taking cost benefit analysis, business organization should consider every decision strategically, right? So in this way, vertical linkage analysis help the organization to gain the competitive advantage over the competitors, right? So this is about vertical linkage analysis. Now, next query is, what is the difference between the value chain and value shop model, right? Okay, let us understand what is the difference between value chain and value shop model. This is a value chain. This is a value chain we have. What is a value chain? Value chain includes all the activities, right? A value chain, a chain of value-added activities. A product passed through these activities in a chain, gaining value at each stage, right? So value chain is a chain of activity. A product passes through these activities, gaining value at each stage, right? While in value shop model, this is not a chain of value-added activity. We do not consider a chain of value-added activity. Instead, what we do, we try to solve the customer problems, right? Generally, value shop model is applicable to services, right? Value shop model is not applicable to product, right? Value shop model are generally applicable to services where we want to solve the customer problems, right? We are not considering the activities which add value to the product, right? It is only dealing with the problem, right? So the step involved here are problem finding and acquisition, problem solving, then choice, then execution, control, right? This is a process. It's an iterative process. We keep on doing this process, right? However, secondary activity which support the primary activity are same for both value shop model and value chain analysis, right? Secondary activities are same for both cases. Now, next query I'm going to take. Okay, student is asking me to explain about strategic positioning analysis. Let me revise it again. What is strategic positioning analysis? I have this diagram. With the help of this diagram, we can understand what is strategic positioning analysis. We can understand this concept with the help of this diagram. Strategic positioning analysis, it's an approach of researching what future environment you want to get, right? What future environment. Strategic positioning analysis, it's an analysis to determine what future environment you want to get. Now, every factor, internal factors and external factors will affect your decision, right? So while deciding the strategies which will help you to get your current position to the desired goal, wherever you want to reach, wherever you want to take your business, you have to consider internal factors as well as external factors, because both internal and external factors will going to affect your decisions, and you should formulate your strategy accordingly, right? So this is all about strategic positioning analysis. Strategic positioning analysis, it's an approach of researching what future environment might be, what future environment might be in your internal environment structure and external factors, right? So you consider internal factor, external factors, and then you formulate your strategy accordingly using your own value, culture and system, and formulate the strategy to get your present situation to the desired goal wherever you want to take your business. This is all about strategic positioning analysis. I'm taking next query. I'm taking your next query. Okay, I have explained vertical linkage analysis. Most of the student requesting me to send vertical linkage. Okay, so I have a query which is related to vision, mission. So let me revise this topic again. Vision, mission statement. What is vision and what is mission statement? Mission statement is a statement of company's reason to be. Why does company exist? It's company's reason to be, right? And it tried to find out the answer of these questions. So understanding this concept, I have taken an example of Google company, right? Google company, its mission statement is to organize the world's information and make it universally accessible and useful. So mission statement means company's reason to be, and it try to find out the answer of these questions. What kind of service or product will it offer? What kind of service and product will it offer? what it try to do, Google is trying to organize the information. What Google company is trying to do, it just want to organize the information. What is the primary market Google is targeting? Google wants to target the whole world, the entire world, right? So that's why it is mentioned in the mission statement that it want to organize world's information. So its market is the world, entire world is its market, right? What type of customer does company seeks to target, right? What type of customer the company seeks to target, right? Generally, the one who want to use the information, right? Google company wants to target the people who want to use the information. Next, answer of the question, what are the area of operation? Make information universally accessible, right? So area of operation of Google company is to make information universally accessible. So in this way, from the mission statement, we are getting answer of all these 4 questions. Right, so mission statement is what? Mission statement is a statement. Mission statement will give you the reason why the company exists. It will give you the reason why the company exists, and it will give you answer of all these 4 questions, and which we have confirmed from the mission statement of Google company. We find the answer of company's reason to be, and we find the answer of all these 4 questions. Okay, now what is vision? Vision is what the company want to achieve, right? It is something which is related to future, right? What the company would like to achieve, right? It generally shows the future ambitions, right? So let us see the vision statement of Google company. To make the search engine, this is the vision of Google company, where the Google company want to reach. Make the search engine so powerful, they would understand everything in the world. So this is the vision. This is the future which Google company wants to see, right? It want to make its search engine so powerful that it will give you answer of every question, whatever question you are asking from Google, right? So this is the mission statement of Google, right? Okay, now I'm taking your next query. I have a question that quality inspection is a non-value added activities of quality inspection is non-value added activity of value added as per Potter value chain model. Okay, this topic will be discussed in the evening session. I will explain you in evening session what is quality inspection, whether it is a value added activities or not, right? We will discuss it in evening session. Okay, I have another query. They're asking me to explain the value chain approach and core competence with example. Okay, let me discuss this with example. Okay, I have another query of advantage and disadvantage of value chain. Okay, let us discuss about the core competence. Core competence is one of the strategic framework for value chain analysis, right? It's a strategic framework for value chain analysis. Core competence means having such unique skills, distinct or unique skills. You have such organizational structural resources. You have some such technical know-how that create distinct customer value. Right? You have such distinct or unique value. You have such distinct or unique value or organization structure or technical know-how that create distinct customer value, right? Distinct customer value means you can see from the help of this image what is the meaning of customer value, right? You can see that this commodity is giving less customer value. You can see that this commodity is giving less customer value as compared to this, right? And you are getting the maximum customer value here from this commodity, right? So if you want to create distinct customer value, you must have some unique skills in your business organization. You must have some such organization structure resources or some technical know-how which help you to give a distinct customer value, right? And core competence test can be done with the help of finding the answer of these three questions. If you get the answer of these three questions, it will help you to identify that whether the core competence in any business organization exists or not. Whether your product is giving any end product benefits, whether they have access to wide variety of market, whether it is difficult for competitor to imitate you. If yes, it is difficult for competitor to imitate you, right? And you are accessing the wide market, right? And your product has end product benefits. If all these three conditions satisfy, then you will get core competence, right? Example, you asked me for the example. Example is Google, right? From Google, we can find that core competence exists in case of Google, right? Okay. So we have an example of Google. Google is delivering excellent search result, right? We know that Google is delivering excellent search results. So this is the end product benefit of Google, right? It has access to almost world, right? It has access to wide variety of market, right? We are checking whether the core competence exists in case of Google or not, right? First condition, we have checked that whether it has end product benefits. Yes, it has end product benefits. They are delivering excellent search engine, right? Next question asks whether they have wide variety of market. Yes, Google have wide variety of market. It has access to almost the world. And third question, whether it is difficult for the competitor to imitate. Yes, Google has developed such a beautiful algorithm for its search engine that it's very difficult to imitate Google for other. Right. Okay. I have a very interesting case study of Google here. Let me discuss that case study. When Google entered the market, search engine market was a saturated market. Market had huge player like Excite and Yahoo, right? And Google entered in a saturated market. Generally, it is said that if you enter in a saturated market, you will there are possibility that you might fail in the business if you entered in a saturated market, because you don't have opportunity to gain customer, right? However, Google entered in a saturated market, right? After entering a saturated market, it create monopoly, right? How interesting it is that a company which entered in a saturated market, and after entering a saturated market where Yahoo was a big player, where Excite was a big player, and after entering such market, it has developed such resources, such core competency, it continuously evolved its core competence, right? You know that Google continuously evolved their algorithm, right? So it continuously evolved their core competence, and adopting various beautiful strategies. With the help of all various beautiful strategies, it managed to get monopoly in the same market where the market was a saturated market. And now biggest player like Excite is out of the market, right? So this is how, if you evolve continuously, it will help you to gain competitive advantage, right? And it might help you to get monopoly in the market. Right, I'm taking the next query. Please send me your queries. Please send me your queries. Okay, I have, we have time left, so let us discuss some case study also. Oh my gosh. Okay, Okay, so let us now revise the next chapter, chapter 2, modern business environment, right? Topic which I'm covering in chapter 2 is cost of quality, total quality management, business excellence model, theory of constraint, throughput accounting, supply chain management, gain sharing arrangement, right? So modern business environment, we know that today's business environment is extremely competitive and it's very dynamic. It's keep on changing. It's keep on affecting by various factors. For example, recently lockdown due to COVID-19 will going to impact every business organization in our country, right? So every factor, whether internal factor or external factor, legal factor, political factor, economical factor, social factor, technological factor, every factor should be considered because every factor will going to impact your business organization, right? So you need to understand the impact of all the factors in your business organization. You need to understand the impact of lockdown due to COVID-19 on your business organization. Then accordingly formulate and plan your policies, right? Okay, we know that today's market is a buyer's market, right? Today's market is a buyer's market. Buyer's market is a market where buyers are concentrated, means where a number of buyer's market is a market case studies related to chapter 1 will be discussed in the evening sessions. Okay, I'll discuss the case studies related to every chapter, right? But today's case studies related to chapter 1 will be discussed in the evening session, right? And now I'm going to revise for you second chapter, right? We know that today's business environment is very competitive, very dynamic, and we should consider every factor for taking decision related to our business, right? Today's market is a buyer's market, right? Buyer's market means supplier are concentrated, right? Demand is low, right? Buyer have the upper hand, means customer have the upper hand. This market is a customer market, right? Buyer's market, right? Supplier are concentrated, means there are number of suppliers supplying the commodities or services, right? Demand is low, customer are less, right? Demand is less, buyer have the upper hand, customer have the upper hand, and you have to keep your customer happy, right? You have to keep your customer happy, right? Generally in buyer's market, sellers are unhappy, buyers are happy. You should keep your customer happy, right? And you have to offer competitive pricing and good quality of product for your customer to keep them happy, right? Why today's business environment is a buyer's market? Why? Because of international transition, right? Globalization, all trade barrier has been removed, so suppliers has increased in the market, right? Aggressive competition in the market, macroeconomy, technology, political, social changes, and all these factors. Because of all these factors, now the market has become a buyer market, right? And in buyer market, you have to keep your customer happy, right? Through your product, through your services, you should keep your customer happy, right? Challenge for business today is to satisfy their customer through exceptional performance, right? And in this chapter, we will deal with the following topics, right? You have to give exceptional performance, right, to keep your customer happy. And what we will deal in this chapter is cost of quality, total quality management, supply chain management, and other modern concept, right? So the most important topic in chapter 2 is cost of quality, right? What cost is required to maintain quality is cost of quality, right? What cost required to maintain quality, right? It is also referred to as prevention, appraisal and failure model, right? Quality in manufacturing is a measure of excellence or a state of being free from any defect or deficiency, right? Quality means you are producing, you are manufacturing such product, right, which are free from any defects or any deficiencies, right? Quality is concerned with conformity to specification, ability to satisfy customer expectation and add value for money, right? Okay, see, today's market is a buyer market. Today's market is a consumer market, right? So you should keep your customer. Today's market is a buyer market. Today's market is a customer market. So you should keep your customer happy, right? For this, you have to satisfy your customer expectations, right? Give them value for money, right? Okay, there are 3 views regarding cost of quality which falls under the following category. First, higher quality means higher cost, right? Second, resultant saving are greater than cost of improving quality. Third, quality cost are those incurred in excess of those that would have been incurred if product was built or service performed exactly right the first time. Okay, I'm discussing them in detail one by one. What is this? What are these 3 views regarding cost of quality? What are the views regarding cost of quality? First view regarding cost of quality is higher quality means higher cost, right? First view is that if you want higher quality, you have to pay higher cost. For higher quality, you have to pay high cost, right? So you have to decide in between. What do you want? You want a cost, you want a low cost, or you want high quality for your product, right? Quality includes performance and features which require measure of high cost in terms of labor, material, design and other costly resources, right? So you have to decide in between. What do you want? You want a high quality product or you want less costly product, right? You have to decide in between them. So this is about higher quality means higher cost. If you want high quality product, you have to pay high cost. This is one philosophy regarding it. Okay. First view regarding cost of quality is that high quality means high cost. Next view regarding cost of quality is resultant saving are greater than cost of improving quality. I have searched some favorite quotes, some quotes from the internet, I think which will help you to explain this topic, right? Joy L. Griffith, what he said? Good quality is cheap, right? He said that good quality is cheap. It's poor quality which is expensive, right? Joy L. Griffith said that good quality is cheap. It's poor quality that is expensive, right? Ginichi said that cost is important than quality, but quality is the best way to reduce cost. See what he said. Quality is the best way to reduce costs. Instead, in previous view, what we have studied, you have to choose in between what do you want? You want low cost product or you want high quality? You have to decide in between, right? However, in this view, it is said that quality is the best way to reduce cost, right? The bitterness of poor quality remain longer after the sweetness of low price is forgotten, right? So this view said that resultant saving are greater than cost of improving quality, right? If you want to improve if you will improve the quality, right, it will help you to reduce the cost, right? If you improve the quality of your product, if you improve the quality of your product or services, it will help you to save the cost, right? This is the next philosophy, right? Good quality save money and poor quality cost money, right? Good quality save money and poor quality cost money. If you are producing good quality, you will save money, right? See, good quality never cost you money. Good quality save money, right? It's poor quality which is costly, and I have some example through which I can explain it, that poor quality cost you money, right? And deeming philosophy, PDCA cycle is based on this philosophy, is based on this view, right? This concept, in this concept, less rework, less scrap, and other direct expenses related to defect help in saving cost, right? Japanese firm made continuous improvement using this philosophy, and we have case study of Toyota, Cadbury chocolate, which will help us to understand this concept, right? Okay, let me explain you about Cadbury chocolate company, right? You all know about the Cadbury chocolate, right? Recently, a few years back, the Cadbury company was acquired by Mondelez, right? There was a time when Cadbury chocolate faced huge market downturn, when some people find worms in Cadbury chocolate, and Cadbury get immense of negative publicity because of this news, right? And it reduces its sale a lot, right? And it reduces its market share, its sale and all, right? So, because of that poor quality of chocolate, Cadbury incurred lot of sale reduction, lot of loss in market share, and to revamp again, right? To revamp again, it promote its product through Amitabh Bachchan, and it expend a huge cost on it, right? So, good quality is cheap, right? If you are producing a good quality product, it's cheap for you, right? Instead, if you are producing a product, if you are producing a poor quality, you might get negative publicity because of that poor quality of your product, and you might lose the market share, you might get the poor reputation for your product, right? You might get negative reputation, you will lose the market share, you will lose your customer, right? So poor quality will increase the cost, right? It will not help you to, poor quality will not help you to reduce the cost, right? So, this is what I have explained you in cost leadership, that you should try to reduce the cost of your product, but without sacrificing the quality of the product. Yeah, you should try to find out the various way through which you can reduce the cost of your product. You should find the way to reduce the cost of your services without sacrificing the quality of your product or services, right? So cost is important than quality, but quality is the best way to reduce the cost, right? And this concept is used in PDCA cycle, which was introduced by W. Edward Deming, right? The final view is that various quality cost will be incurred if product was not built exactly right the first time, right? This philosophy is used in total quality management. So for this also I have accumulated some favorite quotes, right? Like quality is not an act, it is a habit. Quality first, do it right the first time. Quality means doing it right when no one is looking, right? So you should try to produce your product, quality product first time, right? Instead of producing your product and try to find out the defective product and then do rework on it, right? Instead of doing this, try to produce the quality product first time. Try to produce quality product first time, right? And this is the philosophy which is used in total quality management. Yeah, okay. So here not only direct costs are incurred, but also if you are producing poor quality product, you may lose the customer, you may lose the market share, or there may be some hidden cost, or you may forego some opportunities which is required for your business organization to grow, right? So if you are not producing your product right the first time, you will incur huge cost, huge quality cost, right? So you should try to produce the product right the first time, right? Produce the product right the first time, right? Now, what are the components of cost of quality? Mr. Philip B. Crosby, in his book Quality is Free, right? Mr. P. Philip B. Crosby wrote a book, Quality is Free, from where this concept, cost of quality, is used, right? This concept is also known as prevention, appraisal, and failure model, right? So, cost of quality can be divided into two parts, right? Quality failure cost and quality control cost, right? What is quality failure cost? Cost in consequence of poor quality is quality failure cost. And what is quality control cost? Cost necessary to achieve high quality is quality control cost, right? So quality failure cost is also known as price of non-conformance or cost of poor quality, right? And quality control cost, also known as price of conformance or cost of good quality, right? Quality failure cost can be divided into two parts, internal failure cost and external failure cost, right? And quality control cost can be divided into two parts, appraisal cost and prevention cost. Now, what are these costs? Let us understand it in detail, right? First of all, let us understand what is quality control cost. Cost necessary for achieving high quality. Cost incurred by an organization which is necessary for getting high quality product is quality control cost, right? So first is, to get high quality product, you need to have prevention cost, right? So first part of quality control cost is prevention cost. Cost incurred for preventing poor quality of product or services may be termed as prevention cost, right? Cost incurred to prevent poor quality. You want to prevent the manufacturing of poor quality, and whatever cost you are incurring to prevent poor quality of product and service in your business organization, such cost is prevention cost, right? These costs are incurred to avoid any quality related problem, right? Prevention cost incurred by an organization to avoid any quality related problem, right? Prevention costs are planned and incurred before actual operation, before you actually operate, right? You try to find out how to prevent poor quality in your product and services, right? Prevention costs are associated with good design, right? Good implementation, proper maintenance of quality management system, right? So prevention cost is associated with you having good design in your business organization, properly implementation of plan, maintenance of quality management system and all, right? Prevention costs try to keep failure and appraisal cost minimum, right? So if you incurred high prevention cost in your business organization, if you incurred high prevention cost, you will have to incur less quality failure, right? If you incur high prevention costs, if you will incur cost here, it will help you to reduce quality failure cost, right? Internal failure cost, external failure cost. So if you increase this cost, these costs will get reduced. There are some examples of prevention cost like quality planning, quality assurance, supplier evaluation, new product review, right? Error proofing, capability evaluation, quality improvement team meeting, quality improvement project, quality education and training, right? Okay, so this is about prevention cost. Now the next topic is appraisal cost, right? Quality control cost. Next topic, cost necessary for achieving high quality product is appraisal cost, right? Appraisal costs are associated with measure and monitoring the activity related to quality, right? You keep monitoring the activities which is related to quality, right? You keep monitoring those activity in your business organization, right? Appraisal costs incur to determine the quality requirements in your business organization, quality standards in your business organization, performance requirements, right? Appraisal cost is the need of control in product and service to ensure a high quality in all stages, right? Appraisal costs are associated with suppliers and customer evaluation of purchase material, process, product, services to ensure that they are as per specification. So what is appraisal cost? It is related to monitoring the activities, monitoring every activities of your business organization, which includes purchase of raw material to process, to production, to sale, right? Sorry. It is related to purchase of raw material, process, production, right? Right. And it includes verification, quality audit, supplier rating, checking and testing, purchase goods and services in process and final inspection, test, field testing, product process, service, audit and calibration of measuring and test equipment, right? Okay, these are all appraisal cost, right? Cost incurred to monitor all the activity in your business organization, right? Right? Control you put in your business organization to ensure high quality in all stages of your manufacturing process, right? All stages. Okay, now next is internal failure cost. Internal failure cost is associated with defects found before the customer received the goods or services, right? Internal failure cost is associated with any defect which you will find before your product or your services is received by your customer, right? Internal failure costs occur when the product is not as per the design quality, as per the standard, right? And they are detected before the customer received the product, right? Deficiencies are caused both by error in product or inefficiency in process, right? So, internal failure may arise due to error in your product, right? You are producing your product and there might be some kind of error in your product, or there might be some inefficiencies in your process, right? Because of which this internal failure arises and you have to incur the cost related to internal failure, right? There are some examples of internal failure costs like scrap, rework, right? If the goods produced by you are not as per the specification, you have to rework on it, right? You have to rectify it, right? There might be some scrap, there might be some waste, right? There might be some delay, some kind of delay, right? Redesigning, shortage, failure analysis, retesting, downgrading, downtime, right? Lack of flexibility and adaptability, right? These are all internal failure cost, right? Now next is external failure cost. External failure costs are incurred to treat the defects discovered by customer. Now, these are the defects which arise when your product or services are reached to your customer, right? And these defects are incurred, right? These defects are discovered by your customer because your product has reached to your customer, right? External failure costs are incurred to treat that defect. Now, in this case, customer will come to you and claim the warranty or ask you for the repair, right? Or you have to deal with the customer complaint or returns, right? Or you have to deal with repairing of goods or redoing your services, right? Or losses due to sale reduction or environmental costs, right? These are all external costs, external failure costs. These costs occurs when product or services that fail to reach design quality standards and are detected after the goods has been transferred to the consumer, after the product or service is delivered to the consumer, right? Okay, now what should we try to do, right? We want high quality product. We want to maintain the quality in our in all the process, in all the activities in our business organization, but we also try to reduce all these costs, right? All these 4 type of cost, right? Generally what happen, if we increase the prevention cost, if we increase the prevention and appraisal cost, internal failure cost will get reduced, right? And vice versa, right? So we want to find out a point which is known as optimal cost of quality, right? It is the point where the total cost, internal failure cost, external failure cost, prevention cost, appraisal cost, these total costs are minimum, right? That point is known as optimal cost of quality, and we should try to find out this point, right? Right, we want to keep these costs, internal failure costs, external failure costs, prevention costs, appraisal costs, minimum in our business organization. And to achieve this point, we have to find the optimal cost of quality. Right. So there are some steps of application, the prevention, appraisal and failure model. Right. We have some step. First step is to gather some basic information about the number of failure in the system. Second step is apply some assumption to that data in order to quantify the data, chart the data based on the 4 elements listed above and study it. Allocate the resources to combat the weak spot. Do the study on regular basis and evaluate it on your performance. Right? Let us understand these points in detail. What are these points? Okay, so next topic is conclusion of this cost of quality. Many of the cost of quality in your business organization are hidden, right? And thus making it difficult to identify by formal measurement system, right? We have an iceberg and only 2 to 3% cost we can find out, and most of the costs like 20 to 40% cost in our business organization are hidden, right? Only a minority of cost of poor quality and good quality is obvious, and it appears to us, and it is easy for us to find out these costs, right? The reduction of cost underwater has huge scope, right? So the costs which are hidden have huge scope for reduction, and we should try to find out these hidden costs, right? To reduce the cost, to reduce this cost of quality, right? And these hidden costs are complaint handling, right? Premium freight cost, right? Excessive overtime, pricing or billing, right? These are all hidden costs. Okay, the next topic is total quality management. Total quality management, it's a continuous improving philosophy. The quality of all product and process in response to continuous feedback for meeting customer requirements. It aims to do the thing. Okay, total quality management. I have already explained you that total quality management is based on the view that you should produce the product right at the first time, right? So total quality management, it's a philosophy of continuous improvement. The quality of all product and process in response to continuous feedback means you are getting continuous feedback, and you are after getting the feedback, you continuously improve your product, right, for meeting customer requirements, right? And your aim is to do the thing right the first time, right? You should not focus on rework, right? To rework or to repair your product or services. You should try to produce your product right the first time rather than fix the problem after they emerge, right? A company should avoid defect rather than to correct the defects, right? Company should try to avoid the defects rather than to correct the defects, right? So what is total quality management? Total means everyone is involved. Quality means continuously improving the service to the customer, right? Management, total quality management with data and profound knowledge, right? So total means quality involves everyone and all activities in the company, right? Total means everyone should involve in your business organization. You need involvement of everyone, every employee in your business organization in all activity of your business organization. Quality means satisfy customer need first time, every time, first time, right? Management, avoid defects rather than correcting them, right? Total quality management approach was originated in 1950 and has steadily become more popular since the early 1980s, right? So there are many philosophers, those who give philosophy related to total quality management, but out of them, W. Edward Deming was the famous philosopher, and his philosophy makes revolutionary changes in industry, in business organizations, especially in Japan, right? The concept of total quality management was jointly introduced by W. Edward Deming, Joseph M. Jurin, and Armand V. Fenbaum, right? What they said that quality in your business organization is everyone's responsibility, right? Quality is everyone's responsibility. Right? Quality comes from prevention, not inspection, right? Quality comes from prevention. So you should focus on prevention. You should try to you will incur prevention cost, but you should focus on prevention, not on inspection, right? Quality means meeting the need of the customer, right? Quality is a teamwork. You need to work in your business organization in a team, right? Quality require continuous improvement in your business organization, right? Quality involves strategic planning in your business organization, right? Quality means you have to find the result, right? Quality require clear measure of success, right? So quality is not expensive. Quality is priceless, right? And this total quality management framework was introduced by W. Edward Deming, Joseph M. Jurin, Armand V. Fenbaum, right? Total quality management is a management philosophy that seeks to integrate all organizational function, right? In total quality management, they try to integrate all organizational function like marketing, finance, design, engineering, production, customer service, right? They integrate all the information to focus on meeting the customer needs and organizational objective, right? So you integrate all the function of your business organization, marketing, finance, design, engineering, production, customer service, you integrate all the information and focus all the function on meeting customer requirement, right? Right. Total quality management aimed at improving quality of the organization. Through total quality management, you aim to improve quality of your business organization, including goods and services through continuous improvement, right? Total quality management is indeed a joint effort, right? Everyone should involve. It's a team effort. I have already discussed this with you, right? It's a team effort. Every member should involve in it, right? It could be the senior, be the lower member of your organization. Everyone should work in a team, right? Total quality management requires that company maintain quality standard in all aspects of its business, right? This requires ensuring that things are done, right? Total quality management require you to do the thing right the first time, right? Right? Instead of finding and eliminating the wastage, instead of finding and eliminating the wastage, try to do quality product first time, every time, first time, right? Okay. Total quality management philosophy of business behavior embraces the principles such as employee involvement, right? Total quality management require employee involvement, continuous improvement at all level of your business organization, and you should focus on your customer. You should focus on the need of your customer, the requirements of your customer, as well as being collection of related techniques aimed at improving the quality, such as full documentation of activity, should have clear goal setting, performance measurement from customer perspective, right? Right. So we have 6 C's of total quality management. 6 C's of successful total quality management is commitment. You need commitment, you need culture, you need continuous improvement in your business organization, you need cooperation, you need customer focus, you need control, right? Let us understand what are these 6 C's which is useful for the successful implementation of total quality management in your business organization, right? Total quality management means do the thing right the first time, right? And there is no scope for the rework, right? Do the thing right the first time, no scope of rework. So, out of the 6 C, first C is commitment, right? W. Edward Deming said that quality is everyone's responsibility, right? Quality improvement should be part of everyone's job in your business organization. Quality is everyone's responsibility, right? And a clear commitment from top management must be provided, right? Proper support and training is required because everyone should involve. So they all should be properly trained, right? And proper support to all of them should be given so that everyone should involve in quality, right? So quality is everyone's responsibility. It needs commitment in your business organization, right? Now the next is culture. Proper training is required for the change in culture and attitude, right? If you want to change the culture, what is the culture? To achieve zero defective product. You don't want to make defective product. You want to achieve quality in your product, quality first time, right? So if you want to change the culture, you first need proper training in your business organization, right? Right? Management accountant, in generally what happen in a business organization, management accountant often associated with management accountants often associate creativity with creative accounting, right? And associate negative perceptions, right? So all the negative perceptions in your business organization should be removed. Also, what is creative accounting? Creative accounting means you are showing something which is completely different from the actual reality. And generally this happen in your business, in some business organization, where the management try to show something which actually does not exist in your business organization. Management generally try to show a beautiful picture of your organization which actually does not exist in your business, right? So so this negative perception of your management should be avoided, right? So it requires proper training in your business organization. Everyone should be trained to adopt a new culture and attitude, right? Right. Encourage individual contributions, encourage everyone's contribution in your organization, and make quality norms part of everyone's job, right? Encourage everyone in your business organization for the quality contribution, and quality should be part of everyone's job in your business organization. Now the next C is continuous improvement, right? Your business organization should focus on continuous improvement. It should be recognized that total quality management is a process, right? Total quality management is a process. It is not a program, right? And it requires a long-term focus, right? It's a never-ending process. Business organization should keep on doing this, right? It's a process. Business organization should keep on doing this. So it's a continuous improvement process, right? There will always be a room of improvement. You can't say that you have achieved the perfection and there is no room of improvement, right? Howsoever small the improvement, you should go for it, right? So there is always room for improvement, no matter how small the improvement is. Every improvement, no matter how small, is valuable for business organization, right? Next is cooperation. Application of total employee involvement principle is paramount. On the job, experience of all employees must be fully utilized, and their involvement and cooperation sought in the development of strategies and associated performance measure, right? Cooperation of everyone in your organization is required, right? Total employee involvement is necessary for business organization, right? For implementation of total quality management. Now, next is customer focus, right? See, there are two types of customer. One is internal customer for your organization, and another is external customer. Who are external customer? External customer are the customer who finally receive your goods or services, right? The customer who finally receive your goods or services are external customer. And what are the internal customer? People inside your department, inside your business organization, right, are internal customers, right? So the need of the customer are the major driving thrust. You should understand the need of your customer, right? And after considering the need of the customer, you will find your business process, how you will formulate your business process and strategies accordingly, right? So you should not just focus on the external customer who buy your final product within the organization, right? So you should not only consider the need of the external customer, the final customer who receive your final goods or services, but you should also focus on your internal customer, the internal people, the internal colleagues of your business organization, right? Right. So in this way, you can achieve zero defective product if you consider everyone's need. Now the next is control. Documentation, control procedure and awareness of current best practices are essential for total quality management implementation to function appropriately, right? You need proper documentation, you need proper documentation, right? You need proper control procedure, awareness of current best practice, right, of your business organization, right? Control mechanism is frequently required for customer service and employee improvement, right? Should have control in your business organization. So these are the 6 C's which you should successfully implement in your business organization for achieving total quality management process, right? Okay, the remaining topic we'll discuss later on. These are the topics which I'll discuss you later on in the evening sessions, right? These are the topics which we will discuss later on in the evening sessions. And please send me your queries. I'll answer your queries in the evening session. Okay, thank you so much, student. We'll take your evening session. We'll revise the remaining topic in evening session, and we'll consider the case studies also from chapter 1 and from other chapters also. Thank you so much.